So today, we're going to dig into the latest financial results from one of India's biggest players in the game, ICICI Prudential AMC. And we're not just going to skim the surface here. We're going to decode the signals that tell a much deeper story about the company's real health and where it's headed. Because let's be honest, that's where the really smart money looks. While most people are chasing whatever's trending on social media, the big institutions are often acting on these subtle clues buried deep inside the financial reports. So for the next few minutes, let's put on our investor hats and see what they see. All right, let's jump right in, starting with the two biggest announcements that came straight out of the company's board meeting. Think of these as direct messages they're sending to shareholders about how things are going. First up, and this is a big one, the board is recommending a final dividend of 12.40 rupees per share. Now, a dividend isn't just free money. It is a massive statement from the people in charge. Companies just don't hand over cash like that unless they are feeling incredibly confident about their earnings right now and their stability for the future. And then, right on the heels of that reward for shareholders, they announce this. They're approving almost 800,000 new stock options for their employees. This is a signal pointed inwards at their own team. So, what does it mean when they do both of these things at once? Well, when you piece it together, it's pretty powerful. The dividend screams confidence in their cash flow. The stock options? That shows they're desperate to keep their best people on board for the growth they see coming. Rewarding both the owners and the team at the same time? That's a huge, bullish sign that leadership truly believes the future is bright.
Okay, so the board is feeling good, but does the performance actually back that up? Is the engine of the business firing on all cylinders? Let's take a look at the company's actual profitability. And wow, the answer is a resounding yes. The company pulled in a profit before tax of over 44,000 million rupees for the year. Just take a second to let that number sink in. It's absolutely massive, and it's the engine that powers literally everything else we're talking about. But listen, we have to reframe what profit really is. It is not just some number on a spreadsheet. It's proof. Proof of a strong business model, proof of efficient management that's keeping costs in check, and proof of a rock-solid position in the market. Profits like this, year after year, are the clearest sign you can get of healthy, sustainable growth. All right, so the company is making a ton of money. Great, but is it actually growing? That's the billion-dollar question, isn't it? So let's shift from looking at how efficient they are on the inside to how much they're expanding on the outside. Let's look at the assets. And the numbers here, well, they tell a pretty clear story. The company's total assets jumped in a big way, going from around 43,000 million rupees to over 50,000 million. A leap like that tells us two things. One, the business is getting bigger, and two, they're building a much stronger foundation for whatever comes next. Now, I want to show you something, a little detail that I guarantee 99% of people just scrolling through the news completely missed. It's not a flashy profit number or a dividend, but it might just be one of the most important clues about the company's long-term strategy. Tucked away in the fine print is this thing called a business transfer agreement. I know, sounds super boring, right? But stick with me, because this is a huge strategic chess move. It's like acquiring a specific new skill or a new weapon to gain an edge. It gives us a peek into their vision for the future. And we're not talking about some small side deal here. This agreement is valued at over 1,000 million rupees. A company doesn't drop that kind of cash on something like this unless they are absolutely playing the long game. This is a big bet on their future. So what's the game plan? It's this classic, brilliant three-step move. First, you expand. You go out and acquire new tools and capabilities. Then, step two, you consolidate. You use those new tools to make your position in the market even stronger. And finally, step three, all of this sets the stage for future growth and maybe even market dominance. All right, we've covered a lot of ground. We've talked about dividends, profits, asset growth, and even some pretty slick strategic plays. So let's zoom out and pull this all together. What does it all really mean? So here are the key signals we've been decoding. The strong profit growth, that screams efficiency. The rising assets, that tells us the business is expanding and it's working. That dividend, well, that's just pure confidence from management. And that strategic agreement, it shows they have a crystal clear vision for the future. You put it all together, and you get a picture of a company with real, sustainable, healthy cash flow. And that kind of leaves us with one final thought, doesn't it? In a world that is obsessed with chasing the next hot trend, these results are a great reminder that true, long-term wealth, it's often built differently. It's built by understanding the fundamentals of stable, powerful businesses that just keep on growing.
And hey, just a quick reminder, of course, everything we've talked about today is for educational purposes only. This is not financial advice. Please always make sure you do your own research before making any kind of investment decision.